Turkish lira. I can't pronounce it. I can read it. I just can't pronounce it. It's only 4 letters. Lira. L-I-R-A. Lira. Turkish lira. It's the money they use in Turkey. So Turkey's been having these issues. It's kind of expected, right? Somebody's got to have some issues. Turkey's got issues. They got problems. They upped the interest rate 2% from where it was currently at because the currency's kind of spiraling out of control. And it's basically causing a collapse in Turkey this morning, which was very synonymous with 2008. I remember in 2008 when Greece went down and the whole European debt crisis, but mainly Greece was going down, and we were over here like, oh, that's interesting. It's like a domino. It starts over there and it moves its way over here. But the lesson there is they rose the interest rates 2% from where they were, and the entire thing fell apart because the inflation got too hot. We have time here in America. We have some time before the inflation gets insane. But when the inflation gets insane and they have to raise the interest rates, full collapse. There's just nothing you can do about it. So basically we're just in the eye of the storm, where we can print money, and actually as other countries collapse first, we can continue to just print fake currency, just printing it. But eventually, inflation genie comes out of the bottle, and the only way to put the genie back in the bottle is 20% interest rates. And we can't service the debt, our national debt, on 1%, 2% interest rates. So if we have to go to 18 or 20, full collapse. Just let you guys know, because it's interesting now, because Americans will be like, oh, Turkey, you hear about Turkey? Yeah, they're basically in full collapse right now. Yeah, it's just Turkey, no big deal. Same lesson. It's that's the poison that killed them, interest rates. That's what it is. They printed too much fake currency, inflation got hot. To put the genie back in the bottle, they rose interest rates just a little bit, 2%, full collapse. That's where we're at. That's how thin the ice is. Real thin. The best thing we could do as America to help them is to weaken our currency. So print more of our currency so their U.S. denominated debt, it becomes easier for them to pay. Because you got to think, they've got U.S. denominated debt, and the U.S. dollar just rose 15% over the Turkey lira. Well, now all their debt is 15% higher. It's all costs 15% more. So the best thing we could do is, continue to print our currency. Just continue to print it. So that's what we'll do. We'll continue to print it. And then at some point in time, reality will hit, and it'll be like that age-old lesson, is just as true as the sun coming up every morning. You can't print fake currency and it work out. You just can't do that. We're going to do it. We're going to do a lot of it. We have so much more coming. I told my dad, this is my prediction for this year, we're going to print 10 trill. 10 trill. He's like, nah, no. I'm like, yeah, 10 trill. And the next year, we'll probably be at 50 trill. Probably 50. It took 200 years to get to 5 trillion in debt. It only took us less than 12 months to print another 5 trill. We're over 30 trill. So yeah, we'll print 10, and then next year we'll print 50. And that's when it starts to get gnarly. And based on Japan, theoretically, our Fed should be good for 150 trillion. I think so. I think that's where the red line is on this American steamboat. But we're going to find it. Guarantee that. We are going to find the red line. And no matter how you don't want to do it, you pump off the throttle and stop the money printing, and the boat's going to take on so much water that it's going to sink. Or 2, you just keep revving that baby out until a head gasket just blows. But it's not going to be the head gasket. It's going to be the entire block. The entire block is just going to blow apart. And that's what it is. So you have this deflationary period, super hyperinflation, full collapse, full deflation. And it's going to be fun. And the lesson is can't print fake currency. Can't do it.
So we're collaborating with other central banks at the BIS and elsewhere. We've also we've got at the board here what we call the Tech Lab. That
was quick, wasn't it? It's whew, Turkey's going up in smoke, and here comes the Federal Reserve. Hey guys, we got central bank digital currency coming. Yeah. Inclusion. We want to take care of the people. Yeah. Of course. Get ready, folks. Here it comes. They'll screw this up, though. You can trust that. They will screw this up. So let's begin with the end in mind. If you're an American male, start at the end. Do you have an assault rifle? Are you good with your assault rifle? Now's the time to own one. It's going to be an interesting experiment. And at the end of it, the people will never trust central bankers again. They will never trust central banking again. Because they are going to drop the ball in a way that is going to be unbelievably, it's going to be epic. And it's 50 years in the making. Like I said, every fiat currency, all-time record, 50 years. Average, 35. We'll make an all-time record. We'll make August 15th, 2021. But are we going to make August 15th, 2025 or 2030? Definitely not. Definitely not. So much turmoil coming. You have no idea what happens when a currency collapse and reset occurs. But I can tell you Bill Gates is ready to go. He's got the farmland. He's ready to go. He's just waiting, folks. They're just waiting. So American males, get your assault rifles and get ready because it's going to go down. You know it's going to go down. I know it's going to go down. You have to be living under a rock or just completely not understand history to understand every 81 years this is what's happened. And it's going to happen bigger than it's ever been before.
And cannot achieve. And again, my point from before is we shouldn't focus solely on central bank digital currency when we talk about modernizing the payment landscape. I mean, what we did, for instance, on our side here is to team up.
Actually trying to beat them at their own game? To what degree do you see things like Bitcoin or Libra representing financial stability threats that you're trying to get ahead of?
First, I spent 9 years here trying to get people to call me Jay, so please.
All right, Jay. What are you going to do about Bitcoin, Jay?
Yeah, absolutely. Let me just take a step back and say that our work on CBDCs is not primarily motivated by the appearance on the scene of cryptocurrencies and stablecoins. It really is fundamentally, technology has made it possible for us to offer a new form of trusted money and that sovereign anchor that has been so important for economic development for a very long time.
I'm not buying that, Jay.
Bitcoin, and therefore not really useful as a store of value, and they're not backed by anything. They're more of an asset for speculation. So they're also not particularly in use as a means of payment. It's more a speculative asset that's essentially a substitute for gold rather than for the dollar. And I think with crypto assets,
for that G word, that gold, God, and guns, that's where we're going. So when they fail, and they will fail, I can assure you, they will fail. Internet might not be on at this point in time, but you'll be like that one OnSiteTrav guy. He said this shit would happen, and it happens. That's right. It's going to happen, and they will reset against gold at the very end. They will reset against gold, and they will reprice gold however they damn well please. That's why you own gold. If you want a serious trade, I would heavily consider, one, you need to own Bitcoin, even if it's $100 of Bitcoin, because you need the education in how to buy Bitcoin, how to hold it. You need the education. So consider it not an investment, consider it an education. You need that. You got to do that. That's immediate. Two, you've got to stack silver. You have to stack silver if you see what's coming. You got to look at how these things ratio out, how they'll play out. If you look at the ratio to silver to gold, it's 60-1. So like 60 ounces of silver is equaling 1 ounce of gold at current prices. If you look at what's in the Earth's crust, they argue between 1 in 12 and 1 in 16. The US used to have like a legal mandate at 1 to 15. Current mining rates is 1 to 8 because the theory there is most of the silver is higher on the surface and most of it's been found throughout time. And then we have iPhones and stuff and we throw them in the trash and it goes in the landfills and they have silver content. So the mining ratio is 1 to 8 right now. But the paper trading is 1 to 60. So if you were to theoretically buy silver, you shouldn't theoretically buy, you should go buy silver. You should own silver. And then as those ratios come in line, let's say 1 to 20, you trade those 60 ounces of silver for 3 ounces of gold. And then you wait for them to balance back out to the gold to Dow ratio. So 2 times in history before, last century, 1933, 1980, 1 ounce of gold equaled 1 whole share of the Dow Jones Industrial Index. 30 of the largest, biggest American companies in there, right? So 1 ounce of gold equaled the entire index. So now you've got your 3 ounces of gold. You wait for that ratio to come back in line. It's a bottoming cycle every 50 years thereabouts happens. 1933, 1980, 2030, like that's where you might see it. And you just trade your 3 ounces for 3 shares of the Dow. So now we're going to current prices, $30 an ounce, basically. You're looking at like an ounce of gold or 60 pieces of silver, 60 ounces of silver, $1,800. Trade that silver for 3 pieces of gold whenever that ratio comes in at 1 to 20. You could, maybe wait for a 1 to 10. The mining ratio is 1 to 8. Might even get crazier than that, but 1 to 20, let's not be pigs about it, right? So 1 to 20. And so basically what you've got is you've got an ounce of gold for $600, like today's value. And then you trade that ounce of gold for the Dow. So it'd be like buying the Dow at 32,000 for 600 bucks. That's a reset. That's how you make money. That's how you get enormously wealthy on this situation. But mind you, this situation is going to be nasty. The Dow doesn't just fall that much and gold rise that much without some turmoil. So food, water, guns, like that's the type of like, you're gonna have to get through this period to get through this trade. But if you're successful in getting through this period and you have strong diamond hands, you don't have to give up your gold because you needed to buy food. Like if you can figure out how to survive through this time and even prosper through this time, you don't have to give up your gold to trade it for some resource that you may need, and you can just hold like diamond hands to the top. That trade exists. Now, if you want to put it in hyperdrive, maybe you take that $600 investment, $1,800 investment, because we want 3 pieces, right? Like we want 60 ounces. So we take our $1,800 investment, we buy Bitcoin with it, we wait for it to double. You know it's going to double. Bitcoin's like 55 or something right now. You know it's going to double. So at the doubling, I mean, I won't be cashing out. I don't sell my silver, gold, or Bitcoin, but like you could take your 1,800 out, still have your Bitcoin. Now you're moonbagging. You're riding for free, right? You got your Bitcoin for free. You got your Satoshis. Now you've got your silver. You can just go right on an online exchange and just pay with your Bitcoin to get your silver. Silver comes in. Gold ratio to silver ratio happens at some point in the future. You swap them out at a local coin shop. Then you wait for the Dow to drop that much and gold to rise. So Dow will be dropping. Gold will be rising. At some point, they should balance out to a 1-to-1. That's when you make your swap. Boom. Now you're in the Dow, rest of the life, just figure it out, live off dividends. That's it. So, I mean, right there, that's a situation where you got 1,800 bucks, you end up with 3 whole shares of the Dow index, and you still got Satoshis. That's huge. That's huge. How many Satoshis would you have? Let me do the math for you real quick. To buy Bitcoin at today's price is 57,000, and you bought 1,800 bucks of it, and when it doubled, so we're looking at like 115-ish, you were to go on jmbullion.com and buy silver at that point in time, 60 ounces of silver. You'd still have 1.5 million Satoshis. So you would have 1.5 million Satoshis, you'd have your 60 ounces of silver, and then you make your trades. And that's it. That's all you gotta do. Simple. I mean, you should do a lot more. Like, you should be plowing. You should be plowing into those assets. But I mean, that's it. That's all you gotta do. Like, you're good. So you're welcome. But make sure you got your butt covered, because the currency reset, you gotta get through the trade. Remember, you gotta get through the trade. And that's gonna be interesting. Supply chains will break down. So self-independence and community gonna matter a lot in the future here.